Hey everybody, it's Pete Carmasino. This is the halftime show here on StockCharts TV. I'm the chief market strategist at Chaikin Analytics. And each and every week, we go over what's happening here in the markets. And we've had just a tumultuous week. One of my favorite words to say, to be honest, about the market. Not turmoil. I'm not going to go with the headlines and the crazy stuff that you see on TV and all that other jazz. But look, there's been just an incredible run in rates, right? If you look at just the month of September, or even since yesterday, from the beginning of September up until yesterday, the 10-year rate alone is up 15%. It's not at 15, relax. It's up 15%. So it's trading at like 409, 410, trading today at like 472 or so. And, you're talking about a massive move higher in the 10-year yield. Now, we've been talking about TLT, and I am gonna get on the soapbox again. I apologize, but the point of this is that TLT is sort of a proxy just for, again, I know it's a longer term one, but it tends to jive with the 10-year for whatever reason. The duration's lower than 20 years. Blah blah blah. I won't bore you with all the details. Doesn't matter how the sausage is made. It matters how it tastes, and this is how it tastes right now. It's not so good if you're long. If you're short bonds and you've been paying attention for the last 18 months or so, you're eating great right now, right? You're doing well. The point is we're getting to a level now, it's starting to get a little dicey, I should say, with TLT and or the 10-year rate, even the 2-year rate, right? So you look at the 210 spread, a lot of people looking at that, and obviously we are too, but the realization of it is that interest rates are kind of trickling down and affecting a lot of different parts of the market. We certainly know that in financials. I don't know how many times I've talked about, the lending situation in banks, whether it's regional or national banks or larger banks, right? But the regional banks account for about 70% of commercial loans out there, okay? We've got to understand what's happening there. Everybody knows about what happened in March of the banking crisis where, banks in general have a lot of securities, Treasury securities, bonds in general, could be different types of bonds, but a lot of Treasury bonds on their books, right? That's their tier one assets, their safe asset. They got to have that. It's a regulatory requirement. We know that those values are down. The mark to market is going to be a problematic situation. We saw today in the UK, there was a bank that had a problem. We'll look at that headline as well. And their shares fell or plummeted or crashed, whatever you want to use, about 25 to 29% or so. Okay. So what's happening is sort of the cracks in the foundation are starting to appear. People see them. They're trying to fill the cracks in. It's just the interest rate level right now is just a problematic thing across the board. There's no doubt that we know the correlation between bonds and interest rates. It's inverse. The problem is now you've got oil moving backwards, the dollar moving up. That's the right correlation. And it wasn't that way just for several days, probably months, I should say 60 days. And so you saw the dollar rallying and oil pushing up to new highs. And now that's reversing. And so a lot of things are reversing on the charts, especially in the oil patch, so to speak. And, that's just something you got to be cognizant of. Again, I'm telling you that this is driving everything. The interest rate market, obviously the dollar, and what's happening across the board, even with large cap tech. Some people are calling it a safe haven. I'm saying that there's two FANG names. How about that? Remember that? Now everyone talks about the Magnificent Seven, but the FANG, the original FANG, Facebook, which is Meta, Apple, Amazon, Netflix, and Google. Two of the big names, Apple and Netflix, have turned negative on their relative strength. So that's important, right? I mean, Microsoft's kind of teetering with it. We'll look at those names today. And then I've got a host of names that are breaking down, unfortunately, on the downside that, on the relative strength. So I like to kind of point those out. We talked about home builders, by the way, a few weeks back. They have just, not cratered, but they continue to fall and put in lower lows. And that's never a good thing. I don't care what sector you're in. You just got to be careful. So we talked about Boeing several weeks ago. That also continues to fall. We talked about the restaurants. A lot of restaurant stocks are falling as well. So you've just got to be careful. This that rolling breakdown. And now I'm seeing two names, obviously Apple and now Netflix, on the downside for relative strength. So we'll look at those charts and definitely going to look at the TLT along with the dollar and the S&P 500 and the Nasdaq composite as well. So let's take a look and see what's happening, and let's dive into these charts right now. All right. Yeah, I was up early this morning. That was 9 hours ago. I'm recording around 2 o'clock or so. So it was about 4:30 or 4:15 in the morning. Yeah, I was up. Probably because of that big space there. I wasn't writing very well. That was only one cup of coffee in. So, I saw this headline come across, and I just, I wonder if this is the first casualty of rates. So I tweeted it out. It's the Metro Bank here. UK's Metro Bank shares suspended multiple times after, they use the word plunging. I use plummeting. Two nasty words when you own a stock, down 25%. Now, this is the banking sector. We know it's been problematic, and we'll look. But hey, just a reminder. Obviously, I'm here on Twitter. You can follow me at Pete Carmesino. For these kind of daily updates, things of that nature. I'll see a picture of my dog if you want. That's good old Sadie. She's a good friend of mine. Let's move on to the charts and see what's happening in my favorite chart to beat up on, which is TLT. Okay, here we are in the chart of TLT. Just looking at the chart that I know it's getting old and maybe tired of hearing about it, but I'm not. This is something that's very important. A lot of people are starting to pay attention to. I don't know where they've been, since these levels where we started talking about the 150 or so back in December of 2021, when I warned everyone to avoid bonds for this massive move up in rates. That a lot of people said, no, it's not going to happen. I'm bottom fishing, and then it continues to roll over. This is the sort of the quintessential, sort of bottom fishing that we say here is the most expensive sport in the country, especially when you're wrong. And, a lot of people have been on this trade. So I've been saying 75 to 80. Now, to get the 210 yield to be properly set up, in other words, where 10s are higher than 2s, if 2s don't change and the 10 moves higher, you're talking about this particular product, right? This vehicle, this TLT, is most likely going to get into this range. If the 10-year yield starts to move higher and gets above that 5%, right? It's not one for one the way it was back in 2008, right, on this chart. And if I even go back further, you can see that we're basically at around 2007 levels, or should I say levels not seen since 2007. But when we're up at this level of 5.25, TLT traded as low as $50. All right. So again, just be aware of that. I don't know if that's going to continue or be the case this time, but I do know that I'm sticking with this target. If I was short this and I was actually playing this as a trade, I'd probably start whittling off my position, but I would definitely keep some on for the full ride. But I'm just, I'm still calling this out. It's something that I'm concerned about, obviously, and I want to keep track of. All right, let's move on to the Nasdaq and the S&P. All right, I'm going to keep this chart up. I'm going to keep it going as well. I mean, it keeps hitting this low where we were before, about a pullback of just below 10% or so from the recent high, not from the all-time high, but just from that recent high. Broke down on the channel, and I think this gap fill is definitely in play, which now, oddly enough, and you'll see this on the S&P as well, the 200-day is sort of just migrating right into that area. And so a lot of folks definitely, and I do too, we focus on the 200-day. It's definitely one of those areas where you can see around here, it bounced around, held, danced with it a little bit, moved higher, but that's what happens. On the downside is the same game. When it breaks, it kind of tries to come back, flirts with it, and then rolls over. And so that's kind of what's happening right here. We're below this channel, and I think it's going to continue at these levels, where we are today. Again, a lot of if-then. I think it continues if we get, a really push up in rates and obviously earnings start to come in. And there's no doubt if that starts to happen and we start to see a rise in unemployment, I think that could affect a lot of these names, especially even tech, even though rates could start to press lower, but that's not going to happen initially. So I would just be aware of that. Let's look at the S&P. Okay, this chart's really interesting, and I'll zoom in so you can see this, but I want you to see the full picture here first. You can see, and let me close that list so it looks a little bit better here on the chart or on the screen. And you can see, right, the S&P 500, nice channel. It's been adhering to it. Look at the 200-day just riding the line here. It's pretty interesting to me as well. But, we are this is areas of support, right? We're sitting in this area where the 200 days coming into play. Now, it's a little bit closer here than it is on the Nasdaq. The Nasdaq's down at its gap fill, But I'm saying that if we get into this 4172 to 4200, which everyone's calling for, I think it's got to strengthen up immediately. I just don't see the catalyst, and I'm concerned that the continuation is there. However, it's not there yet, and we have to see this break the 200. And so, maybe I'm concerned and worrying about nothing. I do like this bar. If I squeeze in here today, this is today's bar. Look how it's just adhering to that gap fill. And in the last couple of days, 3 lower, higher lows in a row. And if this holds, again, it's only 220. And so if this starts to move higher out of this little circle, we might be experiencing a nice bounce and maybe get back to these levels of around 43.30 to 43.50. I would think that's going to be resistance. As you can see, these last 2 times it was support, so it becomes resistance. Although there is a gap fill. How about that? That could be in play as well. That's interesting, but we'll watch this one day at a time. All right, last chart here on ACP platform is our dollar chart. Again, that pushed into new highs, 107 and change, and then look what it did. It came right back and trading a little bit, pushing lower. Now, it's fallen out of this channel. This channel is not holding up. I'm going to have to rebuild that. But it's just riding it at the moment, but really not getting toward the highs. If it does, it's going to push up to the 109, 110 level. And I would think if you look back here, there's a cluster of activity around this level. Most likely becomes resistance and falls, but maybe it's already experiencing that around this 105 to 106 level. So we'll see what happens. Keep an eye on that as well. Okay, I said I'd look at some financials, and we can't talk about interest rates and without talking about banks. And look, a lot of people are talking about taking a position and starting to look at the value add at these levels and looking at valuations. Look, I don't play that game, and when I do, I don't play it well. But I see names like Citigroup in a downtrend, been in a downtrend since here, and where is it traded? It's been dead money to down money, right? And so it's been dead in a range bound, and then just precipitously falls. And when did that start to fall? When rates started to rise, and obviously the bond prices started to fall as well. And so these bigger banks are having the same problem as the smaller banks, and they're all kind of in the same boat. Even like a Bank of America, right? Almost the identical chart. But really in a downtrend since almost a year now, right? Since the December timeframe, even November timeframe. Again, dead money to down money, right? It's been dead, it's been sideways, and now it's down. And now you've got even Wells Fargo, same looking chart, nothing positive here. Again, they're holding up. You can give them that. There is something there. But if you look at our power gauge, we're bearish on these names and very bearish on others. This is just in a downtrend. That's kind of what's happening. If you look at the indexes like KRE, which is the regional banking index, we've talked about this now. A lot of folks are kind of bottom fishing here. It looks like it is getting better. You can't ignore it. I can't say that the relative strength is not improving. It's definitely oversold, right? You'll hear that a million times, but no one will ever tell you when it's overbought. Decent yield. There's some positive things here. If you're going to play that game, just leg into it and do it in a dollar cost averaging. Not something you want to just rush into, do an all-in move like you would, with pocket aces with 2 aces on the flop. It's not that trade. However, you could start to leg into it. Just be aware that, the downside is still there, and you could look at potentially, support right around that 39 and change, and even lower around 36. So if it stays in that area and starts to stay sideways, it could be better money going forward, but again, you're getting paid to wait. As long as it doesn't fall further than that, you should be okay. Depending upon rates, where that happens to go. I just showed you Metro Bank in UK down 25 to 29%, and halted traded many times a day. I'm not saying that's going to happen. I'm just saying it can. All right, moving on to the FANG names. I said we'd review some of these. We know them as Facebook, right? But Meta, they changed their name to. Looking great. I mean, this chart has been on fire. It's been perfectly set up and plateauing slightly. You can't ignore that. However, the relative strength is incredibly strong, not breaking down. Google also looking interesting and very strong as well, right? It's kind of, adhering to the trend line. Trend line still pointing up. Strong stock, strong industry, strong relative strength. Also good. Microsoft flirting with a change, negative money flow, and breaking the trend. Now, not the worst setup here. I think we can give Microsoft a little bit of leeway on the downside here. However, we can't ignore the fact that it's weak. And actually, we've even downgraded it to neutral plus. So again, remember, neutral plus is a bullish stock. So good fundamentals. Look at the power gauge on your ACP platform, but broken its long-term trend. Now, the two culprits, first is Apple. It has broken down for, I don't know, about a month or so ago, and not really breaking down much further, recovering these recent lows and getting above that last swing low, that 171 or so. See how it popped off of that today. Just hope it holds well. Just remember, when the dollar rises, as I said, when interest rates rise, bonds fall, the dollar rises and puts pressure on foreign sales, especially a name like Apple. Now, Netflix is the one I wanted to call out. Negative today, breaking recent lows, I should say. Massive money flow negative on the downside. But the relative strength, now this is a really interesting. It does fight back. You can see in the past here, when you get a negative relative strength, it's not the all-out signal. However, this one's different. I've got negative money flow, and I've got a break of the trend. The trend's flattening. I would almost argue turning lower as well. So be aware of it. It's happening. It's new on the chart. This is where we were talking about it before at around 210 to 230 last year, almost a year ago to the day, and now it's turning the other way. So just wanted to call that out on the FANG names. All right, here's a screen that I ran today. Again, these are my breakdown names. Some interesting names here. A lot of neutral plus starting to change. This is a capital markets name. A lot of money managers use this platform called SEI Investments. They're an asset management holding company. They're a turnkey asset manager. A lot of investment advisors and even broker dealers use to find good money managers on. And, this has been sideways, again, dead money for most of the year and just starting to break down. Now, I don't know if that's a sign of anything, but I'm just saying that these are important levels for a name like this. Just if you happen to have exposure to it, just be aware of it. Building names like Weyerhaeuser, I know it's a REIT, but, we know what they do. They're a timberland owner. You get a lot of lumber and that kind of thing from there. It's definitely in a downtrend as well. And then you start to look at a name like, we go a little further down the list here and start to look at a name like AutoNation. I think it's up top here. Here it is. Another neutral plus name, but breaking down pretty hard here. Again, interest rates affecting the car market. There's just no doubt about it. You just got to, be cognizant of this. If you open up the power gauge, financials are strong, right? But the weakest part of that is their debt to equity, right? And the price to book. So valuation and heavy load of debt on higher rate, rising rates is not going to bode well for this name. Even though looking forward, again, very strong valuation there. But I'm letting price dictate what we do here. And to me, I would think these levels of 128 are very important. It's trading at 135 right now. So just use that as a sort of line in the sand for yourself. Another building name here, household durable name called TopBuild. They're in the installation and distribution of insulation and other building material products in the construction industry. We know what's going on there as well. Everything is looking strong. Again, don't forget, neutral plus means this is a bullish name by our standards, the way we measure it on our 20-factor model. But when you start to break trend, you got to be cognizant of it and be very careful of money flow. But I say this all the time. This is just beginning. So just something to keep in mind. Another name that's on the list is, we talked about this just months or weeks ago when it first started to break down. And now it's continuing. So you see that push back, a lot of people covering their shorts or buying the dip, and now it is dipping lower. Just be careful. Again, bottom fishing, most expensive sport in America. A name we also looked at, which is Quanta Services. Again, what do? They build electric and gas utility, renewable energy. You can say utilities if you want. And that's in a very nasty downward trend here as well. Just be careful with that. And that's neutral. And you look at the power gauge, financials are weak. So, we want to be leaning toward something that has stronger financials in these kind of markets, not weaker ones. But even the strong ones can start to fall again, especially if they're interest rate sensitive. So be cognizant of that as well. All right, everybody, that's all we have here today for the halftime show. Didn't mean to sound very negative today, but I'm just pointing out what's happening out there. A lot of other folks are as well. But if you're watching me, I want to be sure that you've heard it from me and, be able to go back and kind of look and see how our process stood up to the test of time. And that's been something we've been very proud of here and looking at over the past 18 months or so, being very sort of, pounding the table, so to speak, on the names, especially in the fixed income area. But some names that are breaking down, you just got to watch those trends. And when they're breaking out, they look good as well. So again, there's always a push and pull in the market. And I just want to make sure that everyone's, aware of what's happening out there in the interest rate market as well. The markets have been very volatile. I don't think that's going to change going forward. So we'll be back next week earlier on more on time than Thursday, but I appreciate you being patient. Thanks again. Follow me on Twitter and leave me some good comments below. Love to see what you guys think of the videos. Take care. We'll see you next week.